Hello traders, welcome to your daily market update for Tuesday, the 16th of June 2015. Overnight we've seen a pretty lackluster session. There wasn't a lot happening. It was a bit of a choppy session, but the market is really heating up towards the FOMC minutes later on in the week, and the Greece situation continues to unfold. So let's go through some quick headlines where the dollar consolidated, as we've seen some falls in the Empire State Index. We also seen some falls in industrial production, manufacturing production, also down, and that weighed a little bit on the US dollar. We've seen the euro trade higher, even though we are seeing some pretty difficult situations coming out of Europe, and the price moved up on the back of the Eurozone trade balance outperforming. You can see here 24.9 billion as opposed to 22 expected. That was a good result. You can see just below it the manufacturing, the Empire State Manufacturing Index actually came in weaker along with the remainder of the manufacturing sector data for the US dollar. So that was pretty much what dominated the market conditions. Now we move over to a new day, and we have seen the RBA come out with their statement. It was pretty flat, just saying they decided to cut and they're going to wait and see before they really do anything else, and they hope to see that the Australian dollar lowered. I think that's just a standard comment they put in there. So really had no effect to the Australian dollar, or not to a great deal anyway. So tonight we're moving to the UK, and the pound has been very strong lately on the back of housing prices moving up 3% from negative 0.1%. We're also seeing that we've got resistance now at $1.57, and we have a host of data coming in, which you can see here. Overall, I think the data is going to improve and be quite strong, and that could definitely affect the pound. The pound is at 6-year highs against the Australian dollar, the Japanese yen, and the pound has been performing quite consistently of late. It's been the quiet performer as the world's been focused on the US dollar and the euro, and the pound's just been grinding higher, and we'll have a look at that on the charts as well. So we're having a look here tonight. We also have some euro data coming out. We have the German ZU economic sentiment survey, and that's going to be quite important, as well as the employment change for the eurozone. But the ZU economics sentiment is going to be another one that everyone will be watching. So it's going to be interesting to see what happens throughout the European session. We have a host of UK data. We have some pretty important euro data, and I'm sure that we'll get a little bit of price action on the back of that. And then we have some building permits and housing starts for the US session. Later on, we do have some account balance coming out for New Zealand, and we'll see if that continues to improve. And if it doesn't, well, I'm sure that the New Zealand dollar will move back in under pressure and continue its next move lower after it consolidated from its recent interest rate cut. So Wednesday, we do have the Bank of England's minutes, and we do have the Fed. It is a big day, and I'm sure that we're going to see some price action. Moving just quickly over to Europe, you can see now that the price action has been unbelievably subdued as a result, and I think it's because we're becoming desensitized to the Greek drama that's been going on for a number of years now. But we are getting to the pointy end, and the Greek news is undoubtedly bad, and it's this late in the day that it looks like Greece could actually default. Forex confirmed that Athens will not be presenting any new concessions in a last-ditch meeting on Thursday. So if they're not coming with any new concessions, they're basically hoping that the IMF will back down. He's calling their bluff, and if he doesn't go with anything and it isn't accepted, basically that condemns Greece to defaulting. Unless the creditors like the IMF do a 180-degree turn and accept the conditions, which I don't think is likely. So we could start to see some volatility kick in on Thursday with the euro, but we'll have to wait and see exactly how the market reacts as a result of, really, it's a technical default has already happened, but whether it's actually officially recognised, whether the market gets a little excited or not. Here we are on the 4-hourly US dollar index, and you can see that yesterday we really went nowhere. It was a choppy day in a really tight range. Ultimately, we are in a downtrend on the 4-hourly. You can clearly see that we're making lower highs and lower lows. So the pressure is to the downside, but the only thing that can really counteract that is if Yellen on Wednesday does put forth a pretty strong plan and forecast for the US economy and an interest rate rise for it to actually to bounce higher. So that's what the market's going to need. Otherwise, the US dollar could continue to unfold in this downward channel or potentially actually increase and make a new low if it's disappointed. I'll be talking more on that heavily tomorrow. But for today, I still think that we're going to remain somewhat range bound as the market's really anticipating Yellen's speech to either indicate a number of factors which I've started putting together ready for tomorrow's webinar and this video. Let's go and have a look at some charts. The New Zealand dollar, you can see, was consolidating, somewhat range bound down here, and we do have some New Zealand data coming up, as I mentioned, tomorrow, so we'll see if that will continue the next leg lower. But I ultimately think that on Wednesday, the US dollar is going to dominate, and any moves in any other currency pairs will be negated, and really the US will take the reins here. And if it does come in strong, I'm sure that it will continue to move lower and continue to be one of the weaker pairs that have indicated that they'll potentially cut again. The Australian dollar has been well supported, but we're still trading below 78 cents. It is the current resistance level. I believe that this resistance level around 78 cents is going to hold until Wednesday, and then we'll see how the market reacts from that point on. And we had the RBA minutes, and it wasn't really inspiring at all. It was quite a neutral tone. Basically said, yes, we cut rates a few meetings ago. We decided to keep it on hold on the last one, and now we'll just wait and see whether the data picks up or not. And if it doesn't, we'll have to revisit cutting again. So that's where we're at with the Australian dollar, and I think we're going to remain within the range. The euro versus the US, you can tell, is in a tight range, but we did finish the day stronger, and that was on the better than expected data coming out of the trade balance. And we do have some more data coming out, and it may actually grind a little bit higher as the US dollar, as I mentioned, was under a little bit of pressure. So we'll have to wait and see, but I think for now we're going to remain range bound, and the market, I think, is just too scared to do anything on the back of this cruise situation. It's quite surprisingly that they're not selling off the euro currency pair in fears of default, because really we're getting so close. The Great British Pound's been phenomenal. We've had a great rally, and as you can see here, the pound is quite at home to having very long runs, and that is a trait of the Great British Pound. But we are moving up, and $1.57 is the next resistance level. We do have data coming out tonight, and we could make a run for that level if the data comes in good. And it's my belief that we could potentially see a test of $1.57 tonight. So it's all up to the data, as I think the US dollar is going to remain range bound, and we will see exactly how things fold out throughout today's session, and we'll close off with a little bit of US data. US dollar versus the Canadian dollar, no surprise, it did come up and test this resistance level that once was major support, and it hasn't broke above it. And as I mentioned yesterday, I don't think we're going to get a breakout unless tomorrow Janet Yellen provides some life back in the US dollar and it does send it higher. So for now, I think there is a greater chance of a slide to the downside on the back of some little bit of US dollar weakness, but I don't think we're going to be moving too far away from this range that you can currently see. And we will just have to wait and see exactly how things fold out. Wednesday is really where things are shaping up, so we could see another consolidation. The Japanese yen, the US dollar versus the Japanese yen has bounced a little bit, lifted on the back of Kuroda's comments today, and he basically said that he didn't mean to predict future exchange rates when he's discussed the weak yen last week, and that did cause this major big sell-off candle. So we're seeing a little bit of a bounce there, but I think that his apology is somewhat going to be affecting the markets, and really everyone right now is going to be focused purely on the Janet Yellen speech. Well, that's it from me today. Hopefully it gives you a little sum up. I think that we could be caught in a bit of a range-bound market. The Great British Pound is definitely in play tonight. Have a look at it and have a look at it against other cross pairs, as we could see some further movement, especially against New Zealand, which has already had a phenomenal run, and the Australian dollar, and see exactly if you can pick up some more pips on the basis that that's the currency pair in trade. But for now, I'm scalping, and I won't be putting any longer term positions on until after Janet Yellen delivers her speech and comments following. That's it for me today. I'll be back again tomorrow. So until then, trade well.